Bitcoin is the most sensitive asset to global liquidity. And so, of course, it goes up the most. Now, for a lot of my audience who's already been listening to this for a long time, they've been dollar cost averaging into Bitcoin for a long time. Maybe hopefully they've seen a lot of appreciation in that Bitcoin stack. I've seen that happen a lot. But a lot of people end up in a dilemma. Jack Mallers called it the hodler's dilemma. So I bought Bitcoin. I did what I was supposed to do. I held like I was supposed to. I have a lot of wealth supposedly on paper, but my life hasn't gotten any improvement. Michael Saylor says you never sell your Bitcoin. So how does a Bitcoiner solve that problem?
Yes. Well, Mark, no one knows it better than us. Welcome to our lives, right? I've been Bitcoin since 2013, and the number on the screen keeps going up. But life doesn't change until you can leverage that wealth, till you can unlock that purchasing power. And that's exactly what we do at People's Reserve. We're designing Bitcoin-powered finance products that enable the responsible saver of Bitcoin to unlock the purchasing power of their Bitcoin without giving up ownership. And the whole idea behind People's Reserve really started with my own failure, my own mistake. And that was in 2019, I bought my first home, a small single-family home, for 100 Bitcoin. And yes, I knew it was a bear market, but my wife was pregnant, and relative to my overall Bitcoin savings, if I didn't do it, she would have killed me. So I had to buy that house, and today I look at the price of Bitcoin and I could have 12 million additional dollars on my balance sheet. Instead, I have a house that I'd be lucky to get $500,000 for. So it makes sense when people understand where we are in the adoption curve, right? We talk about that S curve at adoption. We are at the bottom of the S curve. There's an ongoing transfer of wealth, and it is about to accelerate. Right now, you do not want to be giving up ownership of your Bitcoin. It is the most valuable asset on your balance sheet by far. It has the greatest potential by far. And if you're in a position where you have to give it up, that could cause long-term pain. And in my case, I could have 12 million additional dollars that I don't have access to. Now, luckily, I was a responsible saver of Bitcoin for a long time, and it made sense, but not everybody's in that position. So what we need are tools that allow people to unlock their purchasing power without giving up ownership, which are financial tools that allow you to borrow against Bitcoin. But the biggest risk in this, and again, this is from another one of my failures. So it's funny how in life we end up learning most from our failures. And I'm sure a lot of your listeners may have been in a similar position. But going into 2020, going into what was COVID, we were also going into the halving. So as someone who had been part of 2 cycles, I figured this is a no-brainer. So, of course, I'm on BitMEX. I'm levered up, baby. We're going into the halving. Let's go. Lever up. This is going to be fun. And then we have a liquidity crisis, right? And then we have COVID, and price falls from 10 to 5, and I'm getting margin calls. And I'm posting a little bit of extra margin. I don't know how much lower it can go. 50% in such a short time is a lot, right? Bitcoin's volatile. It'll bounce back up. Well, no, overnight went below $3,800, liquidated, 400 Bitcoin, gone. So again, another experience I had where it's just a horrible experience to see Bitcoin go from 10,000 to below 38, lose a portion of your Bitcoin that you had leveraged and borrowed against. And then a couple months later, it's right back where it was, right back at the $10,000 point. But it gave me the idea of, for our products at People's Reserve, specifically our Bitcoin-powered mortgage product, that there is the chance to eliminate liquidation risk. So in that same COVID-like scenario, if you came to People's Reserve to get a Bitcoin-powered mortgage, what we do is we cross-collateralize the real estate with the Bitcoin. And by doing that, we can eliminate liquidation risk. So as the price of Bitcoin goes down, every 10% it goes down, your interest rate goes up 50 basis points, or half of 1%. So during the COVID example, you go from 10,000 down to 5,000. That's 5 deviations, or 50%. That's 2.5%. So for a couple of months, you would have paid an interest rate that was 2.5% higher than your starting rate. But as Bitcoin recovered and rebounded, for every 10% price gain, you get those points back. So by the time, 2 months later, you're right back at your original terms. Plus, you had no liquidation risk. You bought your new home, and you can actually sleep in your new home because you don't have to worry about getting liquidated. This is something that we're really excited to offer to the marketplace and to innovate with.
So I have Bitcoin. I've been holding Bitcoin. I have option A, which is to sell my Bitcoin and buy the house, which, by the way, lost opportunity cost is what it is. And to your point, you could have had $12 million instead of a $500,000 house. That being said, what you have is you've had a house for your family for the last however many years, and it's priceless, right? At the end of the day, I just want to just lay this out for everybody. At the end of the day, we don't want money. We don't want money. We want the goods and services that money buys us. And so if you have a family, you got kids, you want to support them, I mean, it's worth more than the Bitcoin. The last couple of years, I built a beach house down in Mexico. We've dreamed about it forever. My wife and my kids are getting older, and we built the house, and I had to pay cash for the house, and it was very expensive. And so many Bitcoiners are like, why would you put all that cash into a house? Don't you know how in 5 years how much that Bitcoin will be worth? And I'm like, why? So one day I can buy a beach house? Right? So I do just want to kind of put this into people's minds. Like, we want money to get things. It's a means, not an end. But that being said, so let's talk about how this works for you. So we're in this scenario today. We have the Bitcoin. We think that it could run to $500,000, $1 million in the next 5 years. I don't want to sell right now at 100,000, 110, 12, whatever it is, and then miss out on that. But I want to buy the house. Now, you're saying that you could give me a loan against the Bitcoin to buy the house, or you give me the house against the Bitcoin, but the interest rate is variable based off of where the collateralization is or the loan to value is?
Yes, that's correct. And what we do is we don't count the house is actually serving as collateral too. So the loan is secured by the property and by the Bitcoin. And the rate is adjustable based on the value of Bitcoin. So if you get into a scenario where you default on your payment, because you can't get liquidated based on price volatility, but if you default on your payment, the goal of us would be, instead of going through a foreclosure and eviction process, which could add up to over a year and a lot of costs from the lender side, we'd rather just give you a call and say, hey, we've liquidated the portion of your Bitcoin to close your loan. Congratulations, you now own your home free and clear. And what you said earlier, I absolutely agree with. I raised my family in that home. I went from 1 kid to having 4 kids in that home. So I have a lot of great memories in that home, and I wouldn't trade it for anything. So it is important for your listeners to understand that. But at the same time, for those who haven't been involved in the marketplace for a very long time and are just now starting to experience the benefit of Bitcoin's price appreciation and getting the opportunity to deploy that purchasing power, using a product like this, I think makes a lot of sense, because we've taken all the steps that we can to learn from the failures of version 1 of Bitcoin lending. So no rehypothecation. We actually have a self-custody option. If you do custody it with us, it's held in our fund, which serves as a special purpose vehicle. So the Bitcoin is not on people's reserves balance sheet. It's separate. So there's no way that we can hold it. There's no way that we can leverage it or rehypothecate it. Just little things like this that we've learned over time. A lot of these fiat finance mechanics don't really work in Bitcoin. But at People's Reserve, I say that we're Bitcoin maxis building for Bitcoin maxis, which means we want to self-custody our Bitcoin. We want proof of reserves. We want guarantees of no rehypothecation. And we want low interest rates. It does not make sense to me and to People's Reserve that a Bitcoiner who holds the most pristine form of collateral in the world, and who, and many times, is over collateralized, right? Like in one of our loans, if you're going to buy a $500,000 house, you have to put up at minimum $500,000 of Bitcoin. Well, with other lenders, you'd like to shoot for a 50% LTV. You're going to put up $1 million of Bitcoin to get that 500,000.
So you're saying you might do a 100% LTV loan?
Absolutely, because it's cross-collateralized with the real estate. So the value of the home is securitizing the loan as well.